Nvidia reported its highly anticipated quarterly financial results that's having a mixed impact from investors. Initially, following the earnings announcement, Nvidia's stock price jumped by 3 to 4% in the aftermarket hours. This morning, Nvidia's stock price was up again, but then turned around and is now trading down roughly 0.5%. Now, a lot of that price action, the reversal especially, has to do with macroeconomic data that came out this morning after a long delay from the US government shutdown. But in this video, I'm going to talk about NVIDIA's results more specifically and look at what's going on inside the company according to the company's management team.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
NVIDIA CEO Colette Kress highlighted that the company generated $57 billion in revenue, which is up 62% year over year, and a record sequential revenue growth of $10 billion, meaning that the company increased its revenue by $10 billion from the previous quarter. This is excellent revenue growth at such large scale. If you compare Nvidia with the other large tech stocks or other Mag 7 stocks like Apple, Amazon, Alphabet, Tesla, Meta Platforms, etc., Nvidia is generating revenue growth at least double of what any other company in that group is reporting. Furthermore, Nvidia is forecasting continued revenue growth rates at that scale. So, if you're looking for a company in the Mag 7 that's generating significant revenue and profit growth, Nvidia is the best in class in that group in terms of revenue growth and profit expansion. Nvidia went on to say that accelerated computing, powerful AI models, and agentic applications were driving growth for the company. And these are now three drivers of its growth. The newer one is agentic applications, which are coming on the horizon after developments from tech companies providing increasing capabilities for their large language models. Yet the management team saying that we're still in the early innings of these transitions that will impact our work across every industry. Right? ChatGPT was only launched in late 2022, and this is what really started the AI revolution that we're seeing today is the launch of ChatGPT and the incremental improvement in large language models that's driving widespread consumer adoption, hundreds of millions, almost 1 billion users on these large language models. If you combine them, it's well over 1 billion. And that's what's driving a lot of this investment is the adoption from consumers. People are using it and businesses are seeing the value. So the investments continue. The company highlighting that we currently have visibility to $500 billion in Blackwell and Rubin revenue from the start of this year through the end of calendar year 2026. So including this year, which they've already delivered on some $150 billion worth of that $500 billion they're discussing. But going forward, they expect another $350 billion in revenue from their existing Blackwell technology that they recently ramped up. And then next year, they're launching the Rubin technology, which they expect will ramp up in the middle of next year. So they've already, and they have visibility. What that means is they have orders, they have connections or conversations with their customers. And it's easy for NVIDIA to have visibility. It's the other side of the concentration risk, right? If you watched my 1 hour long deep dive into NVIDIA, I highlighted that one of NVIDIA's biggest risk is the concentration of its revenue that's coming from 4 or 5 customers, Amazon, Microsoft, Alphabet, Meta Platforms, or its largest customers. And then you can even expand it a little bit depending on that. The end users for NVIDIA's technology, OpenAI, you can include them in there as one of the biggest drivers of demand for NVIDIA's products. So relatively few customers, that poses concentration risk because if there should be any disruption in any of their businesses, then that will be a downside for NVIDIA. But one of the positives of having only a few customers that contribute to a large percentage of your overall sales is you can have greater dialogue with your customers. You can have greater insights into their needs and future plans, and therefore plan your business according to what they're going to need in the next quarter, in the next year, in the next 3 years, in the next 5 years. That's why NVIDIA can tell investors with relative confidence that they have visibility into what their sales are going to be like, because they've had conversations with their largest customers who have placed orders and deposits for what they want next year and in the next few quarters. Company highlighted that they believe there's going to be $3 to $4 trillion in annual AI infrastructure build by the end of the decade. So by 2030, businesses will be spending roughly $3 to $4 trillion annually on their AI infrastructure. And they've been talking about very large numbers for several quarters now, a couple of years now. And it seems like with each and every quarter, they come back to investors and they raise those expectations even further. But it's not based on hype or hope or enthusiasm that's not grounded. They're not building castles in the sky. They have actual revenue, actual profits, actual orders that drives them to have that confidence, right? And every quarter they come back to investors and it seems like they tell you they're going to deliver, like the current quarter, they told investors they were going to deliver about $54 billion in revenue. They actually delivered $57 billion in revenue. Investors were expecting the fourth quarter forecast to be several $1 billion lower than it actually was. So the expectations, the orders continue coming in billions of dollars ahead of expectations. And so they're setting a high bar and they're eclipsing that bar and then setting an even higher bar, and they keep eclipsing that higher bar. And so of course you're going to get confident and enthusiastic when you have that kind of business that's growing at this scale, at this revenue growth rate. And still the clouds are sold out, right? They're still sold out. Whether I look at Amazon, Alphabet, Microsoft, Oracle, they all tell us that their capacity is sold out. And then I look at companies like Nebius, CoreWeave, Iron. They all say that they have capacity that's sold out. As soon as they bring on new capacity, it's purchased, and they don't have, if they had more capacity, they would be generating more revenue. So this was great in the earnings reports that we got this quarter regarding AI and demand for artificial intelligence. Now, I know investors are growing more skeptical and growing more concerned as the spending is increasingly moving to off balance sheet. It's increasingly causing companies like Amazon, Meta, and Alphabet to borrow billions of dollars to fund this expansion, and the financing of these very capital intensive build out are concerning investors, and that's understandable. The risks here are elevated, to be sure, but I think the reward is worthwhile. Now, I calculated NVIDIA's intrinsic value per share at $204. The current market price is $183. And I think after these quarters' fantastic results, I still think NVIDIA is one of the top 5 stocks you can buy right now. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.